There are two things that will help you to succeed when you are trading the Japanese yen pairs. Number one is to properly define the risk sentiment. Now, before you take any of those trades, you must ensure that you have found out whether the market is risk off or risk on. Like when I was doing my analysis, I had the feeling that the market was changing from the risk off that it was the previous weeks to risk on. So I went to the trading view, checked some opportunities, and I saw that there were a good setup on the Japanese yen pairs, and I took those trades. As you can see them on the screen. In today's video, I am going to reanalyze these trades and show you where we can get new entries to add to the positions that are running. It is also very important that if you're trading the Japanese yen pairs, you should have a good risk to reward ratio. Make sure that your risk is very small and your reward is more than 3 times. If you look at the examples we are going to take, the Japanese yen pairs have the potential to move very well. I am expecting good trends in the Japanese yen pairs. Some of the trades should give you a reward of up to 6 to 7 times. You can even catch a risk reward ratio of 10 in these Japanese yen pairs. This is very important. If you are new to the channel, here we post very useful content, tools, signals, and analysis that can help you to advance your forex trading. So if you're looking for a thriving community that can help you to advance your trading business, click on the subscribe button and be a part of the community. If you check the description of this video, you will also find a link to the free WhatsApp channel. When we are trading, sometimes we post free signals there so you can trade along with us. So without wasting time, let's go to the screen. If you look at these trades, I have some of the Japanese yen pairs here, and you can see this is the pound against Japanese yen. I have a trade on CADJPY. I have a trade on USDJPY as well, and I have a trade on EURJPY. If you look at the pound against Japanese yen, I entered this trade here with a risk of 84 US dollar. Then I'm targeting to make up to 1,228. I'm willing to keep this trade for some time for certain reasons. For CADJPY, this trade I'm risking 61 US dollar, and if this trade plays out fine, we can come out with up to 600 US dollars. The same thing with Australian dollar. The risk is 89 dollar, and then we're targeting up to 740 something US dollar. You need to understand that in trading, risk management is one of the most important things. Most of the trades are in profit, but for that of US dollar, it is not yet in profit. Let me take you to trading view and show you the analysis I have there. First, let's start with the GBP JPY. If you look at the pound against Japanese yen, you can see an uptrend forming. Okay, but let us start it from the weekly time frame. Because from the weekly time frame, it will give you a clear direction of what the market is doing. You will see that this market traded up for some time. Then for about 4 to 5 weeks, it dropped, and the market was generally in a risk-off scenario. So when it came to this level and bounced, I somehow felt like the uptrend has resumed. As you can see, it touched here at this point, touched somewhere around here, and then it came back here to bounce off that level. So that was the confidence that inspired me. If you come back to the daily time frame, you can see what happened at that exact point. The market showed a bullish momentum, and that was the right place to enter the trade after the formation of that bullish engulfing candle on the daily time frame. So if you come to the 4-hour time frame, it became clear that a trend was beginning to form. So on the 4-hour time frame, the market moved from this level, created a high, a low, a higher high, a low, and then this movement has started. If you check my trade there, you will see that I entered this trade late. I did not actually enter here. I would have been at peace now, but we joined the trade here anyway. Come down to 1-hour time frame. This is what we have seen. The market is trending up. When I entered this trade around here, I even gave this trade signal to the guys in my WhatsApp channel, and it was playing and playing and playing, but I felt strongly that the risk off was over and the market was risk on. So I kept the trades running, and now this movement has begun. If you want to join this trade, I actually want to add to my position here, all things being equal. So what I will do, if I use the Fibonacci retracement, I can take this trend from somewhere here up to that level. Now if you want to get a clear trend, yes, the 4-hour time frame should help you. So if this trade retraces to the 61.8 fib level around here, this region, I will enter another trade from there, keep my stop loss right there, and can target here with a risk reward ratio of 5. And if everything is going on fine, I can keep that trade to this level with a risk reward ratio of 10. You should understand that this is trading and there are no guarantees. Proper position sizing and risk management will help you to make money in this trading. Your analysis is good, but your analysis is not what gives you the money. So knowing how to manage the money and your trade is very important. So I think that is that about the pound against the Japanese yen. For EURJPY, this is what I saw. Let's start the analysis from the weekly time frame. If you look at the weekly time frame, there is actually a clear uptrend. You see that the market has been trending up very smoothly. It came here and broke out, a fake breakout. If you look at the daily time frame, maybe you will understand why I saw that was a fake breakout. So you see here it broke out and then came back in immediately. So on the weekly time frame, this is what has been going on. So seeing this, the market was clearly in a risk off sentiment, and now the risk on is beginning to play in. So this is an opportunity. Now on the weekly time frame, if you take the Fibonacci retracement from here to here, you see that this thing traded to the 78.6 fib level and bounced. And this is actually a very sweet trade if you had already entered around here. But unfortunately, we were unable to get that trade at that point, okay, because I was waiting for the risk sentiment to change. Then if you come to the daily time frame, this is what we see. The market bounced at that level after the formation of this morning star. This should be a morning star as you see it. There was a clear opportunity to take the trade from here after it came back to touch that 61.8 fib level. So let's go to the 4-hour time frame. This is multi-time frame analysis. This was it. You can actually use a little risk to catch up a lot of pips. So from here, the market went there, came back, gave you a bullish engulfing candle here, which was a good place to have entered the trade. Then it pushed back again, came and sat here, gave you another entry opportunity. Then this noise started here, humiliating a lot of traders. Then it has now broken out of that range and is trading. I was privileged to enter this trade around somewhere there. Let me check it on the. We entered this trade already, but that trade is not yet safe. I will show you why it is not yet safe. On the 4-hour time frame, this is what I am expecting. You know, I'm a long-term trader. I do not just take one trade and close it and come back. If this trade retraces, I still expect it to retrace. It can retrace back here to come and sit well around this area, then continue. I'm willing to keep that trade there. So if it comes, I might add to my position or I might not. It depends because there's a trade already running. So if you take the long position from somewhere around here and scroll down, take this thing, the risk is going to be somewhere there. Assuming if it happens, then the least you should expect maybe a risk reward ratio of 2. Then all things being equal, you can ride this trade to this place with a risk reward ratio of 11. And do not think that this is not possible. It is very possible in this trading. And most times, some people feel like you need to be taking 100 trades, 200 trades to make money. No. My calculation is to allow these trades to be risk-free. Once these trades retrace and create another high and I move all my stop losses to break even, I can keep the trades for even 2 months if there is a need, or even 3 months. I don't care. I just want to not overtrade. Another trade we have here is the USD trade. Let's look at USDJPY. For USDJPY, this is what we see. If you go to the weekly time frame, I've drawn 2 trend lines here. If you check this first trend line, it touched somewhere here and this point. Then the market traded up and came back to this point here. That is one trend line that is showing me the direction. Another one that we cannot ignore on the weekly time frame is this trend line. The market respected this trend line many times, 1, 2, 3, and it came here and violated it. So after the violation of that trend line, we are expecting something. This market might trade back down here. It's possible for this to happen, or if there is enough momentum, it might push back and continue. I entered the trade, but that trade is not risk-free. You should understand why very soon. So let's go to 4-hour time frame. This is what I see. There is a downtrend. The market has touched that point, touched here, and has come back there. Remember, this is that weekly trend line we drew. So whatever the market is going to do at this point is going to be pivotal to the next movement of the USDJPY. But let me tell you what I think might happen. But whatever happens, we are ready for it. And my stop loss is already in place. I'm not going to remove the stop loss no matter what happens. Here we are. You have seen this movement down to this level. It's enough space actually. If you calculate this, the distance between here to this level is up to 4.something%. So it's not a small movement, bro. But this is possible while I'm watching that trade with my stop loss in place. I think that the trade might do this from here to this level. It can trade to the 61.8 fib level and push. So if it trades here and push back into the second trend line that we have kept in place, then come back to settle, then you know that the bullish movement has started. But a word of note, you know that Japan has begun to increase interest rate, and there is a very huge expectation that the Federal Reserve Bank will be cutting rate in September. So if you are going to take this trade as a day trader, good. If you are going to be a swing trader, that you are going to keep this trade for weeks or many days, you need to pay attention and be aware of these things that I have mentioned. There are other currency pairs I am looking at, but this video will be too long. If you have any currency you're trading that you want us to look at it together, please drop it on the comment. If you like the video, please subscribe and be a part of the community. If you have anything that bothers you about trading, feel free. The Weldds Forex Academy is doing well. You can join if you want to learn more. The Weldds Forex Academy has been amazing. I want to invite you to join the Weldds Forex Academy today. Whether you're a total beginner who wants to learn how to trade Forex, or you have been trading for some time and you are looking for a way to stabilize your business and advance your trading, the Weldds Forex Academy is going to help you. Okay, we're going to take you from foundational level training to advanced analysis, both technical fundamentals and market sentiments, and everything that you need to know to be an effective trader. Check the pinned comment for a WhatsApp chat link. Chat us today that you want to join the academy, and we'll be glad to admit you.